Here's how I made more than $5,000 a month in net cash that you can hold over 6 months plus over and over again without using the Airbnb strategy. If this is your first time tuning into this channel, there is an opportunity out there that is called the midterm rental industry internally. Now, keep in mind, I was just at a conference speaking to folks that have been in the industry for decades, and midterm rental is this new, hot, and sexy terminology that we're using, but this corporate housing essentially is what it is, and it's been around for centuries. As a matter of fact, this strategy has been around for so long that there's a specific niche within corporate housing, and there's niches upon niches. The niches that allows us to get the $5,000 a month net, I want to share with you, because once you understand this, you can also apply it. You do not have to be an expert by any means, because as I always say, in that space, there are experts that will guide you through the process. However, you have to know where to exist. So why don't we just take a step back as to where you can find this opportunity and how it works. So the midterm rental insurance space is a sub niche within corporate housing because it is B2B. B2B is another word for business to business. And the reason why we love business to businesses is because big businesses have big money, baby, double B's, right? But in other thing too is it's a very different environment, very different level of professionalism, and you have the ability to get premium rates. Now, keep in mind, there is a method to this madness, and it's very important for us to understand that these corporations will also understand that it is a business. So they need to make money just as you need to make money. So there are very specific terms you need to follow. However, what happens in the sub niche of insurance is that when a homeowner, again, you have to be a homeowner. It gets a little bit more complicated when it's rentals insurance, although there's still coverage there. But typically, 95% of our clientele, almost I would say 100. The only time I've consulted with those who have rental insurance, I've only consulted them and have guided them in the right direction. But in short, if you're paying a mortgage, you're paying a premium, part of that premium has what is called an insurance should something happen to your home. And believe it or not, stuff happens every single day. It's actually more prevalent than we realize. You only know this once you're in the space of how prevalent it is for a pipe to burst, water damage to occur, construction where they need, again, what is called in our insurance, in the insurance industry, loss of use, right? There is then an amount of money that a homeowner is eligible to tap into based on all the premiums that they made. Now, keep in mind, you're making premium payments either annually or as part of your mortgage monthly, and therefore these insurance companies are actually collecting all this money and investing it back into the markets. That's actually how they get a huge surplus of return and excess capital that they don't necessarily have to deploy if no one's having any claims. But because claims are prevalent, but they're not for everyone, there's again an excess amount of capital available for them to invest, right? Because maybe for every 10 home on the block, one gets a claim per year, right? Again, just simple math. Don't quote me on that, but just to show you the level amount of premiums, they're collecting 10 premiums and might have to pay out one claim. So when they do have to pay out one claim, before even the claim gets paid, the homeowner or family member, or what we call a policy holder, right? It could be a family of 5. There's 2 policy holders. One policy holder is usually the ones who are paying the premium of the policy holders. They're eligible for what we call loss of use, not to be mistaken for the amount of money it will take for them to fulfill the claim. This is in addition to, you can no longer live in the home. Where do you go? Therefore, are eligible for this bucket of money of loss of use, which is typically anywhere from 20 to 25% of the dwelling value's worth, right? That's how it's calculated. If you're currently getting value from watching this video, you'll want to make sure you take a second and click below to grab the midterm rental insurance blueprint to help accelerate your process in being able to land these midterm rental insurance contracts with respect to your marketplace. Make sure you click the button below and grab it, and continue on with the gems in this video. When you keep that in mind, now you have the ability that when you're looking to get displaced, let's say you're in a $400,000 home, you have $100,000 worth of loss of use available to you. When you gotta go because a pipe burst, they'll put you in a hotel first. They'll pay that for you. It'll come out of the $100,000 that you have available if you have a $400,000 home, just an example. And then you'll have plenty more that you can spend if they need to find and relocate you in a home that is furnished, fully furnished, utilities are on, Wi-Fi is on, etc. Then that's how they find people like me. or people like you now that you're watching this video. So again, you have the Airbnb operator that's doing the Airbnb thing, fully furnished. And the reason why I say, and I really preface on we don't have to use Airbnb, is because it's the same type of asset, same type of product. You have furnished accommodation. You're just one knowledge and tweak away from doing this. And that is where the opportunity exists. When you're able to have what traditional rent is typically in our area, anywhere from $2,000 to $1,900, $1,800 a month, and you're able to land a premium insurance booking because you know that they have a larger budget and they can actually accommodate it. Because again, the alternative is the hotels, A, is not an equivalent product, especially when coming from a single family home, and B, it will cost them actually way more to pay the hotel than it would to pay you. And that is how we're able to capitalize and land large contracts, such as the first contract that we actually landed was $7,950 in an area that typically rents for $1,900 a month, where our overhead for that home is around $2,400 a month. Hence why we're doing this model, because we don't want to have that delta of $400, $500 that we need to pay out of pocket. We want to make sure we have a business model that can pay for our overhead and then some. So if you do the math, that's over $5,000 a month net. And typically when these insurance booking companies are relocating their families, they do not be alarmed by this. They will typically start with 1 month, but because work takes long, it can always extend into way further out. Unbelievable. I'm talking about 2 months extensions, 3 months extensions, 6 months extensions, all the way up to 9. So you are now netting $5,000 net. I'm talking about $7,950 delta of the $2,400. You're over $5,000. That was one of our first contracts, and we've done it again and again and again. Then we felt other investors do the same again and again. And what you're doing is you're building a business model catered to working directly with corporations because they pay more, they have a bigger budget, they have that excess capital, and you're solving a larger problem. And that is how you can land, again, $5,000 a month goes a long way. Imagine having 4 of those. That's $20,000 a month, and that's the model. Now, keep in mind, I want to be very frank because, and what is it, sunshine and rainbows? Anytime you see someone talk about this kind of stuff online, you're always like, that sounds too good to be true. And it's not. However, there is a process behind it, and you might not always get 5,000. You might get sometimes a $3,000 spread, a $4,000 spread. But would that make you happy, right? Absolutely. Certainly, because in my market, I know that I'm actually 3x and sometimes 5x what a traditional investor would have. And so now it's actually in your best interest to then start forming those relationships, which I have separate videos on. Actually, you can form those relationships. But most importantly, it's important for you to be aware that this exists. If you're an Airbnb operator, you have furnished accommodations, you have utilities included, you are eligible to then take part in this type of business model. And that actually is in your best interest to actually use this as a model to even, give your business a cash injection, as I like to call it, because you can actually play both games. And if you watch one of my videos, how to use the hybrid model, that is what we like to use, where, these corporate contracts may not come to you every single day. So if you don't have one, or you're currently occupied and one's coming to termination, we like to then open it up to Airbnb and until we get the next contract, which we can get very quickly at this point because it is a relationship game. This is the big tip. It is a relationship game. You need to know where these insurance companies live. There are multiple databases. You also need to know how to form relationships long-term with these relocation specialists from the insurance companies, right? So that is really the quirks of the business. It's relationships, and it's being in front of them in the right database, and it's being optimized, right? Once you do those 3 things, you can then land contracts that are like $5,000 net spread. I want to be very clear that it's important that I say net, because there's a lot of things when I was consume content online as well, whether, people making money online, they'll claim the gross, but they don't talk about the net. And I think the gross is sexy, but it doesn't tell the whole story of what you're actually taking home. And because we understand real estate and where the numbers are with respect to your marketplace, by the way, it's not limited to 5,000. I've seen some larger spreads from 7,000, 8,000 to even 10,000. That's That's how insane it can get with respect to the problem that you're solving. This is doable and possible when you know how to play the game of the corporate housing, not to be mistaken by just the word midterm rentals. It's corporate housing, it's midterm rentals insurance. So it's the midterm rental niche, which is a term that we use internally, but is not what I use externally, nor to the client, nor to the insurance company. So keep that in mind. The midterm rental insurance play is the midterm rental is an internal world, and the insurance is the sub niche of essentially corporate housing. And that is how you can start landing $5,000 or more per month checks by utilizing this model. If you got value from this video, make sure that you grab the MTR insurance blueprint. It will help you know where to actually start dropping these properties in and which databases to start with. Make sure you hit that like and subscribe button and check out the video how to maximize your midterm rental profits without using Airbnb.